JJB Sports plc was a British sports retailer. On September 24, 2012, shares in JJB Sports were suspended and the firm called in administrators. On October 1, 2012, it was announced that Sports Direct had purchased part of the business including 20 stores, the brand and its website for £28.3 million. Corporate history. The original JJB Sports Shop was founded in the early 1900s. It was expanded and incorporated in 1971, when ex-footballer and supermarket chain operator Dave Whelan acquired a single sports shop in Wigan and immediately opened a second sports goods outlet in his Sutton, St Helens, supermarket. The original JJB Sports store was established by John Jarvis Broughton in the early 1900s and later was purchased by John Joseph Bradburn. As these initials were all the same, the business was known locally as JJB's. When Whelan bought the store from Bradburn, he kept the JJB name. During the early 1990s, the store portfolio grew to 120 stores by 1994, at which point the company was floated on the London Stock Exchange. In 1998, JJB bought its largest domestic competitor Sports Division. The acquisition made JJB one of the largest sports retailers in the UK, focusing on sports clothing rather than sports equipment. It got to a sales total of £372.97 million in 1999. Duncan Sharp, Chief Executive of JJB Sports, committed suicide in 2002. Mr. Sharp had been with the company for 19 years and was the son-in-law of the chairman, Dave Whelan. It had also opened a new branch in Amsterdam in 2002. By 2005, JJB had expanded to over 430 stores throughout the UK and Ireland. On June 8, 2007, Mr. Whelan sold his residual 29% stake in the firm for £190 million to Icelandic financial group Exista and Chris Ronnie, a sports retailer who previously worked at Umbro and Sports Direct. On October 19, 2007, JJB bought a 10.1% stake in Umbro in a move to protect its stake in the market for England football shirts. This stake was sold in its entirety to Nike in March 2008. In December 2007, JJB announced that they had purchased the original shoe company for £5 million. JJB considered converting some of the smaller JJB High Street stores into OSC stores, keeping OSC as a separate division of the JJB Group which would share JJB's buying, financing and marketing functions. In September 2008, JJB released a less than impressive set of interim results, which included a warning from the auditors raising doubts over JJB's future as a going concern. This is due to a short-term loan repayment of £20 million due before the end of 2008. It was noted that if this could not be repaid from normal trading cash flow, then JJB will be advised to sell some non-core assets to cover the shortfall. JJB's net worth was only £28 million in the beginning of October 2008. In October 2008, the value of JJB shares fell to less than 10% of the value at the time of Dave Whelan's share sale to Chris Ronnie and Exista. This was partly in response to the interim financial report and also as a result of Coface removing credit insurance from debts owed by JJB to their suppliers. 3 weeks later, 34% was purchased by Sports Direct International plc. The fee is still to be reported. On February 10, 2009, JJB put their Corb and Original Shoe Company subsidiaries into administration after failing to find a buyer. By the end of the week, the group secured a reprieve from its bankers to avoid putting the whole group into administration. On October 13, 2009, JJB admitted that former executives were being investigated by both Revenue and Customs and the Serious Organized Crime Agency. 2011 Major Restructuring Plan. JJB is one of many companies that has undergone major restructuring and change due to the recession and now faces a £31,500,000 debt, the closure of 95 stores and a possible hostile takeover by one of its top rivals, JJB Sports, as of February 2011. the firm attempted to raise £65 million in finances from its investors on April 7, 2011. JJB revealed in February 2011 that as many as 95 of its stores faced closure within the next 2 years. Administration: the combined fiscal value of JJB Sports shares had totaled £500 million in 2010, but had unpredictably collapsed to only £1.2 million by late 2012. On September 24, 2012, it was reported by the BBC that shares in JJB Sports had been suspended and that the firm was calling in the administrators. It is expected that many of the firm's 180 stores will close and most of the company's 4,000 employees will be made redundant. It was reported that the Bill and Melinda Gates Foundation is to lose millions of dollars from this outcome, following its investment in JJB Sports in 2009. It was announced on October 1, 2012, that rival retailer Sports Direct had purchased the JJB brand name, website and 20 stores, saving around 550 jobs. However, the remaining 130 stores were to close, resulting in 2,200 redundancies. JJB Sports was officially dissolved with debts of £150 million on November 9, 2012. There were a total of 5,000 employees at its closure. Legal issues: the former boss of both Next and JJB Sports, Sir David Jones, was charged on February 2013, over allegations of forgery and making misleading statements to the market while he was executive chairman of JJB Sports, concerning an earlier £150 million loan. He was man who turned the clothes retailer Next into one of Britain unregistered trademark's largest retailers. Brands: in an effort to distance themselves from the majority-owned branded offering of main competitor Sports Direct, JJB's stock package mainly comprised products from the main sportswear suppliers, such as Nike, Adidas, Puma, and Reebok. However, JJB did operate its own brands, including Patrick and Olympus. Marketing: JJB Sports launched their shopping site, JJB Sports Store, with a view to expanding their market. The majority shareholder of JJB Sports plc was Dave Whelan, but his 99% stake was sold off. JJB now no longer operates the famous Soxodomes, nor any gyms or fitness clubs outside Ireland. Also, because of Dave Whelan's purchase of the fitness club and founding of DW Sports in the autumn of 2009, JJB has lost its association with Wigan Athletic FC and Wigan Warriors RLFC. The stadium previously sponsored by the company has also been renamed the DW Sports Stadium. On September 7, 2011, JJB Sports launched a major new marketing campaign entitled Ready. The campaign involves primetime television advertising, national press coverage, in-store promotions and online competitions. The Ready campaign was JJB Sports' first appearance on television for over 4 years and represented the company's desire to become profitable again. Price fixing: in 2003 JJB Sports were fined £8.3 million by the Office of Fair Trading for fixing the price of England and Manchester United shirts in 2000 and 2001. Which Consumer magazine issued proceedings against JJB Sports to sue the high street retailer for damages on behalf of consumers who were affected by the price fixing. Fitness clubs: the business operated approximately 60 health and fitness centres all over the UK, which became property of DW Sports after Dave Whelan's departure from JJB. JJB also ran health and fitness centres in the Republic of Ireland, which are now operated by Sports Direct following the liquidation of the company. See also: Irish Cup, DW Stadium, OC St Nico Group Pro Am Challenge, JJB Sports Northwest Challenge. References. External links: JJB Sports Online, JJB Corporate, JJB Golf.